Well, happy Monday, July 24th. Want to share with you the latest data here in the Austin metro area. I'm going to show you some of the data from June and July and show you that there's already some pretty clear signs that the market is starting to slow down, especially due to the headwinds of higher interest rates. So this is looking at June. This is 5-year trends. We are the orange line. Light blue is last year, 2022. Purple is 2021. And you can already see in terms of number of closed sales, we're down over those last 5 years. We closed about 3,100 sales in June. I expect we're going to close even fewer in July. And we'll look at that here in a second. But that is number of closed sales. Sales volume, which is the amount of overall price of all these properties, is starting to come down. And again, that's due to the volume of closed sales. Here's the median sales price. So it did go up from May to June. I predict that will be our peak for 2023 is this month right here. I do expect we're already seeing data that it's coming below the 2021 number. We're probably about 5% below that now, but this is showing you our median price did go up from February to June. We had a little spring run. We also had lower sixes interest rates in April, and that helped kind of push up that last little bit of spring. But since mid-May, interest rates have been much higher, and I think that's going to start playing downward pressure on median sales price and number of closed units. Average sales price following the same trend. Every year we tend to have a bell curve in sales. It goes up and then it goes down in terms of number of sales, and I expect that's going to pull the median price and average prices down the second half of the year. One of the main reasons too is listings. So when people talk about listings, we're talking about homes that are on the market that are not under contract. So how many homes can a buyer go out and shop for right now? So if we look at the end of the pandemic, we'll call it February 2022, before interest rates went on their climb, you can see what happened when rates went up. Fewer and fewer buyers started buying, and it just allowed the amount of homes on the market to stack up. We got to late last year. We had about 9,500 homes on the market. Well, we're now above that now. In midsummer, I expect this number to go higher. In fact, it is higher right now. We're about 11,500, which wouldn't even be on this chart. It would be about where this S is up here. So anyways, we're at a higher amount of inventory than we've seen in over a decade. And I'll show that to you here in a second as well. Months of inventory continues to climb. And what that means is that fewer sales are happening, and that means the inventory is going to stack up. So we're probably at least at 4% as we're sitting here in July. So that is looking at June data. I want to come over here and show you July data. So this email comes out from Austin Title. I just got it last week. This chart here is showing you the same pattern. This little red line is starting to dip down. That's number of sales. But this is the week of July 9th through July 15th, just about a week ago. New listings that week were down 17%. So it's not that more sellers are selling their homes. They're not. There's just that many fewer buyers buying homes. Sold listings were down 24% over this time last year. And last year, we already had high interest rates. And so we're already seeing the amount of buyer activity come down in the market, 24% on solds. And solds are, remember, whatever happened a month before closed. And so we already are starting to see that slowdown. Months of inventory, again, is about on par with where we were at that time last year, but I do expect it's going to go higher. Median sales price for that week was down 5.1% from last year at that time, and down 7% from January of this year. And so we're already seeing the median sales price start to trickle back. This market brief here, I know it's probably hard to read for you, but we have about 11,400 homes on the market right now. And in the last 7 days, 1,700 have done a price decrease, and that's about 15% of homes on the market. So just think every couple weeks, about a third of the homes in the market are going to adjust their price. Why? Because they now have a lot more homes to compete against, and they need to do something to incentivize buyers to make offers on their property. The number one thing you can do is price, because that's what's going to drive buyers to make offers. And so we're seeing about every couple weeks, a third of homes. If you took that over a month, that's pretty much 50%. In fact, 60% of homes in the market in a 1 month time period may adjust their price. So, you know, that's very high. And a lot of that has to do with the fact that Austin has a lot of inventory. All right. Now, when we come down to this, I found this data really interesting. This is historical active and pending data. So this is looking all the way back to 2010. Right now, we have 11,420 homes on the market. The last time we had that many homes on the market was 2011, and we actually have more homes than we had even at that time. So in the last 12 years, we haven't had this many homes for sale at any one time. And we have more people in the market, but we also have fewer buyers. So pending history, we last month, we closed about 3,100 homes. I expect that number to come down for July. But the last time we closed that many homes is not even on this list. Probably it was 2010 or 2009. And so we have not sold this few of homes in a month than back then. In the pandemic, we were selling about 5,500 a month. We're now selling maybe half that. So, you know, maybe 55 or 60% of that number. So we're down 40% in terms of buyer activity. I found that really interesting. Here's the two reasons why. We talked about mortgage rates. So, you know, 30-year fixed today, we're just right up underneath 7%. We have been at or above 6.8 since mid-May. So now we've had 2 full months with buyers in the market who have had to pay these really high interest rates, and there's just fewer of them willing to do it. So it's pushing buyer demand down because interest rates are high. The Federal Reserve is going to be meeting this Wednesday. And so more likely than not, the betting odds are that they're going to raise their federal rate again, maybe a quarter point. That's not going to directly impact the mortgage market. But what will is how the bond market reacts to what for what Jerome Powell is going to say. Because if he says, hey, we think inflation's going to last longer and we're going to keep pushing rates higher, the bond market's going to want more yield on the 10-year treasury, and that will push mortgage rates up. However, if Jerome Powell says we're done, we can already see the writing on the wall that inflation's coming down and we're done, well, that might ease off some of the concerns and that might help to stabilize or lower interest rates. Who knows what he's going to say? But definitely something we have to pay attention to. So interest rates this week, more than likely, are going to be very volatile, and we'll have to watch that. The other reason is we just have typical summer seasonality. Every time we get near July 4th, you get past the point where most, you know, people wanted to buy a home for the summer. Now they're buying a home for the fall at this point, and it's really hot outside. I mean, this is our 7-day forecast. Every day is 104 or 105 degrees. There's no rain. And so it's just very hot, and that's just going to make people go on vacation, make them go to the pool. It just takes some of that energy out of the market. We typically see a late summer slowdown in activity anyway, and throw on top of that high temperatures, high interest rates, high inventory. It's just kind of a tepid market at the moment. So pay attention to this. If you're a seller right now, price is your weapon. I mean, you've got to see who you're competing against. You have a lot more competition than you've ever had before, at least in a long time. And so it's really important that we put ourselves in a position to drive what limited traffic there's going to be. We want to maximize the traffic into the properties so that one of those buyers can fall in love with your place and want to buy it. If you're a buyer right now, have a good conversation with your lender because, like I said, interest rates are volatile. You are likely going to have to pay a higher rate than maybe you even thought 3 or 4 months ago. However, if you can get pre-approved, if you can get to a point where the rate makes sense or your payment makes sense, you have very little competition in the market to make offers right now. So there is great opportunity for buyers if you really want to avoid competition and possibly even get housing, you know, at a deal. Now's probably the time to do that. What's going to happen in the next 2, 3, 4 months? I have no idea. The only thing I do know is we will not see these temperatures by the time we get to late September. But I do expect for July and maybe most of August, we're going to look a lot like this on the 7-day forecast. If you want to follow all of these videos, check out @Ryan Kelley Group on YouTube. You can find all of our weekly market trend reports there. And of course, if you want to talk in more detail about the market or about your situation, if you're planning to buy, sell, or invest in the market, we'd love the opportunity to talk with you. Until then, go enjoy your summer, and we'll talk to you next week.